Hi everyone, I'm Ricardo Gonçalves. This is SBS On The Money. It's your daily 10-minute business and finance news wrap for this Wednesday, the 24th of February 2021. Later, wages are rising, but to what extent? But first, let's talk international flying. When can we start? A lot of it depends on the vaccine. I spoke earlier with the CEO of Sydney Airport, Geoff Culbert, and it comes on a day when the organisation posted a full-year loss of $145.6 million because passenger numbers fell by 74.7% last year to 11.2 million. Geoff, total passenger numbers fell 75% last year, domestic 73%. How are those numbers looking in the first 2 months of this year?
Yeah, well, the January month's been a tough one because we've just come out of the lockdown in the northern beaches, and there's a bit of scar tissue amongst passengers who are a bit reluctant to book flights, having had to cancel so many times over the course of last year. But with the vaccine rolling out this week, we feel like the mood of the nation has now changed. There's a degree of confidence emerging back in the market, and it's early days because we still have a bit of a way to go. But our expectation is that as we move through the vaccine rollout this year, we'll see a recovery of domestic and then international passengers.
So the vaccine is rolling out now. I'm keen to get your take on whether or not you think it's going fast enough.
I don't mind the country being a fast follower in this regard. This is a really significant medical process. We've only got 25 million people in Australia. It's not like we're vaccinating a population of 250 million or 1.3 billion. So we can get through our population relatively quickly. I like the way the government's divided it into 5 phases because we know who is going to be in each phase. We're able to track our progress against each phase. What I think we need to start talking about is what restrictions get rolled back as you hit each of those phases. So when you get to the end of phase 1, there should be, and our most vulnerable people have been vaccinated, there's no justification for having domestic borders closed. When you get to the end of phase 2 and the balance of our adult population has been vaccinated, we should start opening up international borders, subject to caveats around having vaccine certificates, passports and risk-based quarantining. But if we plan now and we get these borders open and we get these restrictions lifted, there's a huge opportunity for the nation to really bank the dividend of the great job that we've done managing the virus.
I'm guessing you've got baked into your forecasts when you do expect borders to be fully open domestically and when we can start flying internationally?
We've run multiple scenarios over the past 12 months and the only truth is that they're always going to be wrong because this is not going to be linear. We think though that once we get through the vaccination phases by October, that we should be in a position to start seeing the recovery of international. And as I said, once you get through phase 1, we should start to see a more permanent recovery of domestic. IATA, who's the Global Industry Association for Airlines, have been predicting a full recovery by 2024. We think that actually could happen a bit earlier because their predictions weren't premised on the vaccine rollout happening as fast as it's happened. So as I said, now the vaccine's being rolled out, we think there's the potential for a slightly faster recovery.
And when we can start flying internationally especially, how do you think airports will check passengers for vaccine compliance and documentation? Do you think it'll be digital?
Yeah, there's a lot of work going on in this area at the moment within the industry and also working back into government because there's going to be an interface between the private sector and government in this regard. The way I think it should work is that when you purchase your ticket to travel overseas, for example, you need to satisfy that you've actually had the vaccine, you can show your certificate. You actually need to show that when you check in at an airport. So you actually don't get on a plane to come to Australia unless you've been pre-cleared. Once you get here, then I would like to see a scenario where your digital passport's been uploaded to your physical passport and therefore you can go through the electronic gates at Sydney Airport without having to be processed by a physical customs officer. So there should be multiple checks along the way to ensure that if people travel with the vaccine certificate or vaccine passport, if you will, and those processes are watertight.
Geoff Culbert there, the CEO of Sydney Airports. Let's move on to wages now. Data from the Bureau of Statistics shows the wage price index grew by 0.6% in the December quarter. That was double expectations, and the good news is that most of it came from the private sector. Now, a lot of it came from some workers who had previous coronavirus pay reductions recently unwound, and the deferred minimum wage increase also contributed. However, on an annual basis, wages grew by just 1.4%, remaining at record lows. For more, I spoke earlier with Belinda Allen, economist at the Commonwealth Bank. Belinda, to what extent did the quarterly rise in the wage price index surprise you?
Well, it was a little bit of a surprise. I think the market and ourselves had gone for a slightly softer estimate of around 0.3%. So that 0.6% today was a surprise. But looking at the details, there were certainly two reasons why we did see it come in slightly stronger. We did see a number of wage rates unfrozen during the fourth quarter. So that definitely contributed to the lift. And in particular, it looks like to be in the professional, scientific and technical services area where wages growth rose by 1.2%. So that was one reason. And with the minimum wage spread over 3 quarters, that did contribute as well. So it looks like it was more of a one-off pop rather than a sustainable increase in wages growth.
When you look at it on an annual basis, though, wages are up only 1.4%. How would you describe that?
Oh, look, that 1.4% rate is obviously still very soft. It's really amongst the lowest we've seen over the history of this series, which goes back to 1998. So definitely we're still in for a period of soft wages growth for quite some time. And I think that's reflective of the excess spare capacity we see in the labour market at the moment. But I think we need to separate wages growth from income growth. So we actually have seen income growth be very strong over the COVID-19 period and into the recovery as well, as we've seen a recovery in hours worked, a recovery in employment, and obviously the household income support by the federal government as well. So if we look at income flowing through into CBA bank accounts, for example, that's rising at around 8% per year compared to wages growth at 1.4%.
I guess something that contributed to that is JobKeeper, right? But that's going to end very, very soon. So given all of that and the outlook for wages, how does that flow through to monetary and fiscal policy?
It's a good question. So I think this has certainly been brought up more in recent days with an increase in bond yields that we've seen here in Australia. So, I mean, our view is we're still in for a period of soft wages growth for quite some time. As I said, that's really because of that excess spare capacity in the labour market. And if we look at what the Reserve Bank's been saying, they've been saying that they don't anticipate lifting the cash rate until actual inflation is sustainably within that 2 to 3% target band. And for that to actually occur, there needs to be a significant tightening in the labour market, and that will lead to stronger wages growth. And at the moment, they don't think that's going to happen until 2024 at the earliest. So we would have to still see a material lowering of the unemployment rate before we start to see wages growth sustainably lift, and for that to lead through to a higher cash rate. And that's not in our forecast horizon for the next several years. So at the moment, I don't think it moves the needle too much on monetary policy. Obviously, the federal government is due to end JobKeeper at the end of March. We're still confident on the economic outlook because we do have that strong income growth in place, elevated savings, and that should help support the Australian consumer in the remainder of 2021.
Belinda Allen there, the economist at the Commonwealth Bank. Let's take a look at the Australian share market now. The 200 down today by 0.9%, 6777.8 on the 200. That is a 3-week low. BHP down by 3%, so too Telstra. Technology stocks declined across the board. Woolies did well, though, up 1.1% on its half-year profit update. For more on those numbers and more, I spoke earlier with Jun Bei Liu from Tribeca Investment Partners. Jun Bei, the market's down today. Why?
Well, obviously, we're following the very, very weak US numbers, US last night, and the future is now pointing to a weaker market again in the US, all on the back of the rate fear of the possibility that interest rate might be higher further down the track.
Yeah, to what extent is the market saying that we may see higher rates despite what the RBA is saying?
Yeah, to be honest, I think market is, putting too much fear of the interest rates going to go up anytime soon. Last night, we have heard from Federal Reserve in the US that this is not going to happen anytime soon. And the RBA has voiced a very similar sort of a sentiment. So I don't think it is happening anytime soon. And yet equity market is quite fearful of what this might do to the outlook.
Lots of profit numbers out today. Let's start with Woolies. It has benefited from the pandemic, but sales growth will slow.
Look, it will slow, but still, it posted an incredible over 8% like for like in January so far. This is very different from what Coles has said just a few weeks ago. Coles said its sales already down to just over 3%. So this is actually really good result. Yes, share price is only up 1% in a down 1% market. So and they talked to potentially separating out that Endeavour drinks business, and I think it will do really, really well. So it is one defensive you should have for every investor.
Now, some of the Woolies stores are in Westfield centres, and the owner of Westfield and Australia Centre Group saw a huge loss today, but foot traffic is starting to rise.
Oh, absolutely. Look, it's not a surprising thing that the earnings not great at the shopping centres because not many people was allowed to visit them. But, I think that so far, if you can read from the foot traffic, it's almost back to the pre-COVID level. So people are willing to go out with the minute that the lockdown gets opened up. So we do think this is one stock on the way up, and the outlook is looking pretty positive.
Jun Bei Liu there from Tribeca. That is SBS On The Money for this Wednesday, the 24th of February. You can follow me on Instagram and Twitter at Business Ricardo. This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice, and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.